Hi all, so this is the last video and it's on closing year rules. And so the issue here is that when you come to the end of a business, of course you have to do your calculations and sort of tie things up. But the first thing I want to highlight is this issue of those overlap profits. Now, as you can imagine, you unfortunately had to pay, if you like, tax twice, right, on these profits because of the way it's designed to hit the 5th of April in your very first year and to pretty much hit the whole thing again in your second year, depending on whether you've done a 12-month or but some of it will get hit unless you literally align with the tax year, which is rare. So unless you actually prepare your accounts from the 6th of April to the 5th of April, then you'll never get hit with overlap profits. But anything else you do at some point, you will get hit. It just depends on how far you are away from the financial year end of 5th of April. Okay, so at the end of the year anyway, we can sort of deal with those overlap profits and gain them back, so to speak. So let's just go through. It says our aim is to ensure that any so the first thing is, of course, so let's pretend, right, that your year end, that when you prepare your accounts, it doesn't really matter. I mean, if you prepare your accounts to for example, the 31st of December, right? Let's just go say 2017. Brilliant. Okay. And well, this is a bit too close to what I'm looking for, but it doesn't matter. Let's say this is what you prepare your accounts to, and you've been doing this for a number of years. Now, of course, these accounts will get assessed, if you like, yes, in the 17-18 period. So the last day, I'm just going to use a different pen color. The last day, technically, is the 5th of April, 2018. Of course it is. Now, between here and then, if you close down, say on the, I don't know, whatever, the 28th of February, well, you'll have, of 2018, so you shut down. Well, you have 2 months, if you like, of trade. Now, because these 2 months are prior to the 5th of April, we can assess these 2 months in this financial year. You see where I'm going? So it's all about just adding on whatever has not been assessed that still lives within your financial year, right? And that's all it is. So for example, if you were preparing your accounts to say, it doesn't really matter, say the 30th of August, right? 2017. Well, these still get assessed, yes, in the financial year 17-18. They do. Now, if you finally close down, say, I don't know, in December or in January, say the 31st of January, these September, October, November, December, and January, these 5 months, we just get what those profits were and add them on to this because it's all still within this year. So that's all we're really sort of doing. That's the first thing. So just carry on. I mean, do it as normal first, then find out what those additional months are for. And then it says here, big point, remember to deduct the overlap profits in the final tax year because, of course, you unfortunately had to pay all this tax on them. So now you can get relief on them by deducting them at the end. So let's look at this example. So you have these people here, and this is a normal scenario. They've been taxing, and this, so 30th of April 2016, of course, will be taxed in the tax year 16-17. Of course it will. 30th of April 2017 will be taxed in the tax year 17-18. Of course it will. So we know, right, that I'm going to deal with these profits by the 5th of April 2018. That's when I'm going to have any action. Right, that's my deadline, because 5th of April will come. I'll do I know I have up till then, and then I'll be paying anything post whatever the 31st of January 2019. Yes, because it's always after the financial year end. But in that time, you kept trading, and it says you traded for the period all the way up to the 31st of March. So all of this will now get added onto this because this and this live in this tax year, right? So that's kind of your structure, the way we deal with this. So what do we have? This, the 14, that's done, that's fine, that was done, that's the 16-17. Now in 17-18, you can see they've added it together, the 23 months, but really it's what it is, 12 months plus the 11 months added together to give 80,000. And then they will always give you what the overlap profits are. You're never going to have a scenario where you have a business with overlap. You're not going to prepare the starting point and the end. I mean, that would be crazy to do the opening and to do the closing. If it's closing, you'll get the end if you like the 27th of April. And there you have that. And there you have your final assessable amount. And that's really it. That's really it. So please do the TYU. And that brings us nicely to the end of chapter 7. So please go over this again.